briefly we are going to discuss what is the role of front office, middle office, and back office. But in this session, we are going to focus just on front office. In the next module, we'll cover the middle office, and in the third one, we will talk about the back office. Okay, so let's start. The front office, dealing room. Okay, we all have heard that this is a cash cow for the bank. Bank is making money out of the dealing room, right? So the objective of dealing room is to maximize the return with minimum cash. Simple. Now, this is the responsibility of this department, that is the front office, to manage the market risk for the bank. Okay. Now, when I say market risk, this can come from both the sources. When the bank is trading on their own money, or when the bank is doing it on behalf of the customers. Okay. So how do we control this risk? This risk is controlled through limits. That means how much exposure you can take in the market. For example, one of your desk is FX desk, and they are trading in US dollar GBP, right? So a limit will be given to the traders in this desk that how much exposure they can take on behalf of the bank in any particular currency. Okay. Now, since this office is exposing the bank to the market risk, you can assume that they have significant authority, right? That which markets they want to trade, which financial instruments they want to trade. But of course, we have policies, and we are going to discuss them in the last module, that how do we control the risk for the bank by putting limits and by putting controls. Third point, and very important point, this is the office which is a middleman between the bank and the markets. Okay. So suppose as an individual, I want to trade in a stock market. Unless I have a seat in the stock market, I cannot directly trade in the stock exchange. I need a middleman. So this middleman is a bank, and this office is handling my trade. So they're acting as an interface between bank and the markets. They're also responsible for executing trades. So any trade which goes into the system, which goes into the stock exchange, or if this is an OTC product that is over the counter, okay, all these trades are executed at front office. Now the point to note is executed. They are not responsible for making any sort of payments. They are just there to execute the trades. There is no set industry practice as in that how you should structure your bank. So, or rather the front office of your bank. For example, in many investment banks, you would see that there is a department called FICC, that is fixed income commodity currency. All together, all these put together makes one desk. Okay. But again, there is no strict guidelines. There are guidelines, but no strict practices that you have to have FIC together. Okay. So in some banks, it is very much possible that they have a different fixed income desk, they have a different currency desk, and they have a different equity desk. Okay, so I hope this point is clear. Let's move on from here. So these are the desks I was talking about. Okay, fixed income desk. Okay, so what is the responsibility of this desk? Okay, this desk is responsible for taking position in debt market. Okay, this might be the small as in short-term debt market, which falls under the money market desk, or long-term debt market, which is like treasury bonds, okay, or corporate bonds. Then you have the FX desk. This department is responsible for taking positions in the FX market. Now, these positions can be taken on behalf of the client or on behalf of the bank itself, which we call as proprietary trading, which falls under your proprietary desk. Okay, and sometimes we use this desk to hedge our positions in different markets as well. Then we move on to the capital markets. Now, please understand the difference between money market and capital market. Okay, any instrument which is maturing in less than 1 year, this will fall under the money market. Okay, but if the maturity of the instrument is more than 1 year, it will fall under the capital market desk. Okay, the next desk is commodity desk. So we take exposure in the commodity markets. Okay, via this desk. Okay, so you are suppose trading oil futures. Okay, now oil futures, if you are trading without physical delivery, okay, then it means these will be cash settled. Okay, that means you are betting on the price of the oil, whether they will go up or down, and depending on your bet, depending on your forecasted direction and how actually the oil price is performed, you can make or lose money. Okay, Then proprietary desk, I've already explained to you. This is a desk which helps you in taking positions in the market, but not help you. They're using bank's own money to make money for the bank itself. Then there is a desk called ALM desk. Okay, so we have a separate module on this where I'm going to discuss in detail that what this desk actually does, or what this ALCO team actually does. Then there is a concept of transfer pricing or pooling. Okay, now what is transfer pricing? Now just focus here. Assume this is your treasury desk. Okay, this is your treasury. Now these are the departments we are bringing money in the bank. Okay, so I'm not referring to capital or ALM. I'm just saying that these are the departments which are bringing money in the bank in the form of deposits, savings, and current accounts, whatever. Okay, and these are the departments who are giving loans to the people. Okay, so now these people who are bringing money in the bank, they will park this money with treasury, and they will tell the treasury that how much money or how much interest they are paying to their depositors. Okay, now this becomes the hurdle rate for your treasury desk. Okay, this hurdle rate is passed on to your these departments who are giving money to the outside party, that if you are planning to give a loan to a certain corporation company, this is the minimum interest rate you should charge from this corporate. I hope it is clear. Taking money, okay, what is the cost of my money plus the cost of these departments added together becomes the hurdle rate. This hurdle rate is communicated to these departments who are giving money to the outsiders, and they will charge the interest rate over and above the hurdle rate. Okay, so this is the job of your transfer pricing or pooling function desk. Okay, so this is the case which I definitely want to cover here. Okay, Baring Spank and Nick Leeson. Okay, I hope you might have come across this case before. Okay, but if you have not, let me quickly tell you what this case is all about. So this bank, Barings Bank, was one of the most respected bank of UK. Okay, so they decided to open a shop in Singapore, and they hired Nick Leeson, and they said, Nick Leeson, you go to Singapore, train a team, okay, and trade in the Singapore and Japanese stock exchange. Okay, so this was the task. But this person was clearly told not to trade with the bank's own money. Okay, remember bank's own money, proprietary trading. So this person was told not to do proprietary trading, get the clients and motivate them to trade in the market. Okay, so this person was doing this stuff. Unfortunately, the team did something wrong, as in not manipulation. It was an accidental mistake by one of the team members. And Nick Leeson decided not to disclose this to the management. Instead, he hid those losses in one of the error account. Okay, and then the game started. He tried to recover this money from the market itself, but as you know, he was not supposed to do any proprietary trading. So what Nick Leeson decided, let me get some new clients. Okay, fake clients, as in there are no clients. He started making fake documents. Now why he was making fake documents? Because when you're trading in the market in certain contracts, you do not need to put the whole money. You just need to put 30%, 40%, 50%. Remaining will be coming from the bank. That was 90s. Okay, the situation has changed as of now. So now this person started asking money from the bank because he was showing them that these are the clients which actually were not there. He started trading in the market. He actually recovered all the losses, but the greed took over. He kept on going, and there was a situation where he was hugely exposed to a Japanese stock exchange. Earthquake came in Japan, and the stock market crashed. Okay, so this person realized that he had made a lot of losses. Okay, he ran away with his wife. He was caught. He was imprisoned, and Barings Bank started calculating that how much losses Nick Leeson has given to them. Now, to our surprise, this bank decided that they cannot survive, and bank was sold, and it was sold for just £1. Okay, I'll make sure that I'll upload the reading in your study material. Do read this, okay, because there is a lot more which happened after the case as well. So this is your front office. Okay, now in the next module, okay, we are going to talk about middle office, that why we need middle office. Okay, now through this case you might have understood that they need supervision. Front office guys need some level of supervision, and that's why we need middle office. Okay, anyways, to conclude this topic, let's review. Treasury structure is a three-tier structure: front, middle, back office. Front office is mainly responsible for trade execution and for managing the investments. This office is subdivided into various desks and we do not have any set structure. Each bank can decide which desk they want, which two desks they want to merge. All trading and investments, both proprietary and client-based trading, is handled in this department.